everyone, welcome back to Mindful Investing. In today's video, we are continuing our stock prediction series and the spotlight is on Intuit Inc. Ticker symbol INTU. The stock is currently up about 3.7% year to date, and I'll be breaking down what Intuit's business model looks like, how their revenues are trending across different segments, my 1 year and 5 year price targets using my model, key technical levels to watch for entry points, and finally, whether I think Intuit is a buy at these levels. So stick around till the end and don't forget to check out the spreadsheet I've created with all my price predictions so far, including my personal positions and returns. I'll leave that link in the description below, so definitely save it for future reference. Now, before we jump into the numbers, let's understand what Intuit actually does. Intuit is a financial software company. They are the makers of TurboTax, QuickBooks, Credit Karma, and MailChimp. In simple terms, their products help people with tax filing, personal finance, and small business accounting. Their business model is mostly subscription based and transaction based. QuickBooks generates revenue from small businesses and self employed individuals who use it to manage payroll, invoicing, and accounting. TurboTax makes money during tax season when millions of people file returns. Credit Karma earns revenue from financial referrals, like when they recommend a credit card or loan and the customer signs up. And finally, ProConnect is for professional accountants. So essentially, Intuit is positioned as the financial backbone for individuals and small businesses, and that's a strong niche to be in. Now, let's look at some numbers. Intuit has a market cap of $184.76 billion and revenue of $18.83 billion annually, growing at about 15.63% year over year. Their price to sales ratio is 9.68. This means investors are currently paying about $9.68 for every $1 of revenue the company generates. That's a premium valuation, but it's common for quality companies with high growth potential. In last quarter, they reported $3.83 billion in revenue. Let's break down this by segments. Credit Karma grew at a very impressive 33.8%. It's a big turnaround from negative 15.5% decline 2 years ago. Consumer revenue, which includes TurboTax, grew at 21.2%, also showing strong improvement. Looking at operating income, which is profit from core business activities before taxes and interest, small business and self-employed brought in about $2.23 billion. Credit Karma brought in $280 million. Consumer side brought in $59 million, and ProConnect brought in $8 million, and corporate adjustments are negative $2.24 billion. So the small business and self-employed division is the real profit engine here. On the balance sheet side, they have $9.4 billion cash on hand with a free cash flow of $6 billion and a total debt of $6.6 billion. That's a very healthy balance sheet. They've also been buying back shares, which is usually a shareholder friendly move because it reduces the share count and boosts earnings per share. And yes, they also pay dividend yield of 0.72%, which equals about $4.80 per share annually. It's not huge, but it's a nice little bonus on top of growth. Now, let's run these fundamentals through my stock prediction model. They have a current EPS of 13.67, expected annual EPS growth rate of 15.1%, current PE ratio of 48.47. Based on these numbers, my model gives a 1 year price target of $762. That's about 15% upside from the current price of $662, and 5 year price target of $1,338. That's about 102% upside. Now, in my system, I usually like to see at least 200% upside in 5 years to call something a screaming buy. So Intuit doesn't quite hit that level, but 100% return in 5 years is still very solid. So especially for a high quality business like this. Now let's look at the charts. On the daily chart, Intuit is trading below all its EMAs, which shows short-term weakness. On the yearly chart, it's below the 50-day EMA and I see a key support at $599. If it falls further, the 200-day EMA on the weekly chart is around $561, and I think that would be a very attractive level where long-term investors will load up heavily. Personally, I do own 5 shares at an average price of $674, which I bought recently in another account. So my plan is to hold on to my shares, buy more if the stock dips to $600, and buy even more aggressively if it falls to $561. So is Intuit a buy? Based on the fundamentals, it's a high quality business with consistent revenue growth, strong cash flow, and a great balance sheet. Based on my model, I see about 100% upside in 5 years. Technically, there are attractive entry points below current levels. So, yes, I do consider Intuit a buy right now. Though it's not a screaming buy, I'm positive on the stock and expect it to turn around strongly from the $600 level. If this analysis was helpful, please like the video, subscribe to the channel, and let me know in the comments. Do you own Intuit or is it on your watch list? And don't forget to check out the spreadsheet with all my stock predictions and positions. I'll link it in the description below. Thanks for watching, and I'll see you in the next one.